Okay, I will explain that. I will explain that. So we are still expecting two more members. Okay, can you all see WhatsApp the WhatsApp messages? Because I need to go through the okay, no problem. So I need to go through every question that you ask. So this is how we are going to do today. We first thing I will first answer all the questions in the WhatsApp group. Then we now go to the recap of the previous section. Recap of previous section. That is the review. And if I have anything to explain to you guys, then I will do that. So everything will be done within 2 hours. Okay? Okay, now I think today, okay, I got a question here that says strong rejection and strong bullish candle. Also, next candle is bearish. Okay, strong rejection and strong bearish and bullish candle. Then also next candle is bearish. Like I've said it before, that anytime you see a strong candle like this at the seller's area, and look previously, you can see if you see any weak candle before this strong candle, that means that at the seller's area, the nearest seller's area, sellers will enter the market. So this is what happened here. A strong bullish candle at the seller's area, because already we have seen a weak candle here. So after a weak candle, we saw a strong bullish candle, and it goes at the seller's area. It means that sellers will use that opportunity to enter the market. Now I will show you one thing that will be after the recap of this of previous section. Then I will show you some things on how to predict candlestick, because I've made a video and I want to upload it on YouTube. But I say let me first explain the video for you guys before I upload it on YouTube, because so many things I didn't mention, so many things in that video. I just make it I just make it so simple, but there are so many things that you need to know in that video. Okay, so I will explain that. Now, another question is that buyers have exhausted. Okay, okay. Let's see. Now, the second question is assuming. Yeah, for me. The second question is assuming there was no candle one, but rather candle two for immediately after candle three, and close right on the new level and still made the lower low. Would the next candle be bullish? The answer is Yes, in some reason. That assuming there was no candle one. Now I will tell you the reason why we see this candle one. You can see that it is in the middle of the trend, the bullish momentum and the bearish momentum, a weak seller's entry. But why is it that after this weak seller's entry, we always find a red candle after this? I will show you on the chart that most of the time it happens like that. That after a weak seller's entry, the market still continue. Okay, look at the trade I just take today. I took all this trade on demo account with confidence. Okay, now I'll show you why is it that after a weak candle, the next candle always is bearish or bullish, vice versa, for the bullish trend. Okay, like here now, we can see that we have a strong bearish candle here, a strong bearish. Then the next one was a weak bearish, but still, we are still seeing some sellers movement. Why is it so? Number one reason is one, which the first reason why it happened like this, that after this week candle, the next candle is bearish. The first reading is this. I think I have 11 members here, but I'm expecting 2 more people. Yeah, I think they will have the recorded video. So let's see. Okay, why is it so? Why is it so that after this bearish candle, weak candle, next one we see a seller's movement, a seller's movement. Even though we are seeing some weak bearish, still we are still seeing some seller's movement. Number one reason is this. So it's going to be part of what I want to explain to you. Number one reason is this. Okay, there is a level here. There is a level. I'll show you the level. This level, and again here. This is buyer's level, buyer's area. You can see that after this bearish candle form, the sellers try to push the price lower, but rejected from buyers. It means that the buyers are here. And here also, sellers try to push the price lower, but rejected from buyers. It means that buyers are here. So let me indicate that. The buyers are here. And this one also, the buyers are here. And this one also, the buyers are here. So this is the main reason why we are seeing, let's go back. This is the main reason why we are seeing these weak candles. They form a bearish trend. Now look at it. This is buyer's area. Now at the buyer's area, we are expected to see a bullish candle here, because this candle closed at the buyer's area with a rejection and again a bullish movement. So we are expected to see a bullish candle here, but because of some reasons, sellers still make a bearish candle. Sellers still make a bearish candle here because of some reason. And what is that reason? That this candle was red. But one reason is that here we also have some levels, a seller's area. We also have some levels. So now, if you want to predict this kind of situation, the power of buyers is 50. And also the power of sellers is 60. I'll explain to you how is it so. The power of sellers is 60. The power of buyers here is because, one, we have a strong buyers area. This area that I draw this line, the strong buyers area, which I'll show you on the left side. And here we also have a buyers movement. So now, the power of buyers here will likely to form a bullish candle. But still, there's some sellers at this area. So maybe the power of buyers try to push the price higher, but on reaching the sellers area, they got rejected from sellers. So the sellers are here. And again, sellers still form a bearish candle. That's why you are seeing that after this bearish candle here, we are seeing another bearish candle. It means that buyers are not interested in the market. That's why the sellers continue the market. So this weak candle tell us that buyers are not interested in the market. Like this question, like this question, I think this one. Like this question that says, if there is no candle one in the middle of the bearish trend, and candle two, if there is no candle one in the middle of the bearish trend, and candle two form after candle three, it will not be like that. You can see from this level, look at this, like I just explained. Look at this week that leads lower rejection you are seeing here. It is some bias activities here. There are some bias at this area. But what happened? This bearish candle closed at that area. But if this bearish candle closed at that area with a very small rejection, the next candle is supposed to be a bullish. But it closed at that area, and if you observe the wick of this bearish candle, the wick of the bearish candle is very small, it's very longer. That means it make a new low below previous lows of buyer's entry here. So this bearish candle make a new low below previous low of buyer's entry. So that's why the next candle form a bearish candle. And this week bearish candle tells you that buyers try to make a bullish but fail. So sellers still use the opportunity to make a bearish candle. And after making a bearish candle, there's no, that means that buyers are not interested here. Buyers are not interested in that bearish candle here. That means this week bearish candle tells you that buyers are not interested. So that's why the next candle form a bearish. Now, if there's nothing like this, if there's nothing like this week, let me show you. If there's nothing like this week candle here, it means that there must be another situation here that will not be like this, that this is a buyer's area. There must be another, let's say another market situation that will not be like this. So at this time, there must be like this. This is how the market will be because of buyer's area. So it is not that there must not be any weak candle. So this how is going to be because of this market situation here. But if the market situation is not like this, and there's nothing like this weak candle, the next candle will still be a bullish. The next candle will be a bullish. Okay, so that is the reason why you're seeing a weak candle in the middle of the trend still continue the market most of the time. And again, how many candles for the momentum? How many candles for the momentum? Number one, it can be one candle. Share with you. Number one, it can be one candle. Like this candle, it is a momentum. How is it a momentum? Here, for me, this one candle, this strong bearish bullish candle, it's a momentum. How is it a momentum? If you check that on 5-second chart, you will know that you will notice that you can see from this level to this level, you can see a strong bullish momentum. So this one candle that I show you on 1 minute chart is a momentum. So if you check that on 5 seconds, you will see that this is a bullish momentum. So it is a strong bullish momentum. So one candle, a strong one candle can also be used as a bullish or bearish momentum. not until you see two. But for you to be on a safer side, you must use at least more than two, like this, or like this, more than two or like this, for you to be on the safer side. But you are not using 5 second charge, you are using 1 minute. So in 1 minute, one candle is a momentum, a strong candle. That's what I mean. A strong candle, not candle like this, not coming. A strong candle, not candle like this, not candle like this, not candle like this. Because if you check that on 5 second chart, you will notice that there are some bearish candles. So a strong candle like this is a momentum. A strong candle like this is also a momentum. A strong candle is also a momentum, and this one also a strong momentum, and this one also a strong momentum. So it is because of this strong momentum that I place a call option here. They gave me a winning trade. So I'm going to explain all these trades which I took here. Okay, so let's go to the next question. Then the next question says, what is a buyer's or seller's movement? What is the psychology behind and how to trade it? Okay, I will explain that to you. Okay, please share how to observe the reason before placing any trade, the strong reason for to follow. Okay, I will explain that to you. And if there's, okay, I think this one. Yes, assuming the new level one put there were the correct level, and that bearish candle two close on that level, but with a wick that make a lower. Will the next candle be up or red? Don't understand again. Let me read again. Assuming the new level, okay, put there were the correct level, and that bearish candle two close on that level with a wick that make a lower low. Okay, what will be the next candle? So this is the next level that make a lower low. What will be the next? The next candle is going to be a bearish, because right here, because okay, because right here, if this candle, maybe there's a strong level here, and this candle close with a new low, so the next candle will still be a red. Reason because of this new low. It means that sellers still push the buyer's entry lower to this level. So where the candle close is not, again, it's not buyer's entry. It's just that sellers push the buyer's entry lower. That's why it creates a new low. So where the candle close is not a buyer's area. That means the next candle will still form a bullish in such kind of situation. Okay. Okay. Now let's go to the some recap about our previous section. Recap of our previous section. Then after the recap, then I will explain some things to you. I will explain some trades or the last trade which I took. Now, the first section that we have, we talk about some important candlestick in the chart. And anytime you see this candlestick, you should take note of them, and you should always observe them where they are from. Then we mentioned so many candlesticks. We have the spinning top, we have the hanging man, and we have the inverted hammer, and we have also have the real hammer. We have the marigozu, and we have the doji candlestick. the doji candlestick. These are the important candles that we have in the chart, and you must observe them whenever you see them. And these candles can also be used as a reversal or a continuation of trend. A reversal or a continuation of trend. Say, for example, a spinning top candle. If you see any spinning top candle in the middle of the trend, it's a continuation of downtrend or uptrend. If you see a spinning top candle in the middle, a spinning top candle at the beginning or at the resistance level or the support level, is a continuation, is a sign of reversal. So look at this spinning top right here. Look at this bullish spinning top. It was formed at the resistance area after a strong uptrend. After a strong uptrend, and we are seeing a bullish spinning top at the resistance area. So it means a sign of reversal. So it means that the market will reverse from here with some certain reason. Now also we see a bullish spinning top again in the middle of the trend. So it's a sign that the market will continue to the next level. Either the next level is here or the next level is here. So anytime you see a spinning top in the middle of the trend, it will continue the trend. Or you see them at the support levels, it will reverse the market. Okay. Same thing on hammer candlestick or shooting star. Look at this candle. Look at this bearish candle from here. Like I said, that it doesn't matter the color of the candle. What you are looking for is the shape of the candle. If we see, even though you see a bullish spinning top here, a bullish inverted hammer or shooting star here, we still reverse the market. So it doesn't matter the candle. Look at this hammer candlestick, this inverted hammer. So what is it then telling us? It's telling us that after this strong bullish movement and this red bullish bearish hammer candlestick appear, maybe at the resistance or at the support level, so it is a sign that the market want to go more up. The sign that the market want to continue. Same thing like this. In the middle of the trend, it is a sign that the market wants to continue going more up. These are the psychology behind all these important candlesticks on your chart. If they are fine in the middle of the trend, it will continue the market. If they are fine at the support or resistance area, it will reverse the market. Now look at this one. Look at this bearish inverted hammer, or you call it shooting star. You can see that it appears at the resistance. Appear at the resistance, that means it will reverse the market here. So whenever you see all these candles, you should always take note of them, where they are formed and where they are when they are being found. And the mistake that all people make, and most people make, is because you don't exactly know where they can be found or where they can be used. Is it at the support? And you don't exactly know how the supports are being drawn. How you can draw the support, how you can draw the resistance. Now take a look at this one, this candle. This is a okay, very good. This is a level right here, a strong sellers area, sellers entry, and you can see it's also serve as a support. You can see a support level. You can see a support level. Okay. So a level. This is a level here, and this candle form at the level. This bullish candle form at the level. So, and also show the sign of weakness in the buyer's movement. Previously, you can see the buyer's movement, and you now saw this candle form as inverted hammer, as a reversal candlestick. But what happened? The next candle formed a bullish. Why is it so? Why is it form? Did it form a bullish? Because one, when this candle form inverted hammer like this, it means that this is seller's area, and at the seller's area, there is a gap between that level, and the second reason is that this candle possibly make a new high. So the seller's area that was here, the seller's presence that was here, the buyers, this strong bullish candle, bullish movement, possibly push the sellers to this extent, and then the sellers reject the market. So it means that from this level, sellers have now changed their entry this level. So the sellers are now here, not here. This is just a level. This is a level, and this candle closed here, so it's still far from the level. So because of these strong buyers, buyer will still form a bullish candle. So you should observe the body of the candle and the wick. You can see I have drawn the level very well, but look at it. If this candle will close exactly at this level, it will reverse the market. So this is when the new high will not work. This is when the new high will not work, because this is already a reversal candlestick. Because at this area, you can see a seller's entry from this level. You can see some seller's entry from this level, and again the level. So okay, the gap should be something like this. This gap should be something like this, no more than this. If the gap is like this, if the gap, let's say the gap is something like, let's say this candle, the closing price of this candle is somewhere like this, and with a long wick, and the level is here. Check on the left side if you see any seller's entry on the left side before you now place your trade. If you see any seller's entry like all this week here, all this week, before you now place your trade. Once you check that, you place your trade, either in a put option. But if this candle close exactly at this level here, if this candle close exactly at this level here, or at this level, at this point, it will reverse the market. So the gap doesn't matter. What matters most is the closing price of the candle. Okay, like now, that is why I don't always trade. You will notice that all my trades, which I always trade on those on YouTube or upload on YouTube, I don't. Once I look at the chart like this, I have already know what to do. So I have already see the trend. Then most of the time, I will just zoom out the chart to the extent that I must see this red color here. You can see what they told me. You cannot zoom in anymore with the time interval selected for candles. So the time interval is also what is determine the number of zoom you are going to use. So I select 1 minute. That means this is the 1 minute. This is the highest zoom, which I can use for this 1 minute. And see, they told me that for candles and bars, reduce the interval to have a more this and that. So if I to use candles and bar, I should reduce the interval maybe to 30 seconds or 10 seconds or 15 seconds to see the candle very clear. But now I can see the candle very well. can see there's no gap here, it's reversed. So that's why if anytime you are trading, you should always view the candle like this. If you view the candle like this, you will not see it clearly. If you do it like this, you will not see clearly. But you can only do it like this just to check the levels. And once you place your levels, once you place your line here, just quickly go back. Everything is done within 1 minute. Everything should be done within 1 minute. Just quickly go back and go back to your current price. Then you now look at it very well until you see this red, to zoom out very until you see this red word. So when you look at it, see that there's a gap, and you just place a call option. Like I said before, that when I say the sellers are here, the sellers are here. And look at this candle, it closed exactly at that level. Exactly at that level. With also a rejection from sellers. So it means that the sellers are present here. That's why I'm seeing a strong bearish candle. A strong bearish candle. And what happened next? Next candle form a bearish. Because here there's no bias. There's no bias here. There's no level which you can go with bias. Okay. So you must observe the body of the candles, how it formed in the level or the wick also. That's why I always say observe the wick. It's the wick that make so many professional traders. It's the wick that they use most of the time. They use the wick to trade. And if you observe the wick all the time and you observe them and you place your trade correctly, you will notice that your winning ratio will increase. Once you observe all this week, like I said, that observing all this week will increase your winning ratio. Look at the buyers, the sellers are here, and this candle close at the same level or at the same sellers area. It still form a bullish. That means that if this candle will close without an upper wick, if this candle will close without upper wick, the next candle is supposed to be a bearish. But it creates upper wick just to show, because of this buyer's movement, just to show the sellers that they are very more powerful at this time. So the sellers are now here. Previously, there are some sellers, but if this candle will close without a wick, the next candle is supposed to be a bearish. Okay, yeah, this week, and then this one, and this one, and this one. These are sellers' entry point in the market. And this candle close exactly at that area. So if this candle doesn't have upper wick, the next candle is supposed to be a bearish here. But because of this upper wick, it shows that the buyers are powerful here. They possibly make a upper rejection, showing that the sellers are here. Still, the candle is still far from that level and from this level also. So it means that the next candle will form. And this candle closed at that level, exactly at that level. That's why it forms a bearish candle. So once you observe all this week, and it is this week, it is observing the week that make me to took all this trade which I just took now. I'll explain to you.
Hello, sir.
Okay.
Hello, sir.
Okay, I'm listening.
Are we using the wick that is forming on bullish candle or on the bearish candle if you are going up?
Both. You use both.
Okay.
This will tell you that the market is maybe there are some buyer's entry or some seller's entry. You use both.
Okay.
And this is what I did here that made me to took all this trade. The first trade I took here. The first trade I took here was because one, explain to you, was because one, if you look at this candle, let me place the line here. and again at the rejection. So I place a line at the rejection point and at the closing point. You will notice that this candle, this is the closing point of this bullish candle. What do you see here? You observe something here. You can see that there are some sellers at this area, which tell us that the sellers are active. One, confirm from that one. This one also, the strong seller entry, and this is a level, a strong seller entry. Two, this one also you can see there are so many wicks on that level. You can see a seller's entry point. And again, this one is very close. Still, it's still a seller's area because you count this one and this one together, still a seller's area. And you look at it, this one, you can see so many rejection, so many rejection. You can see again a strong seller's entry. Okay, I will do that. You can see rejection. Rejection means that seller reject the market. Here also you can see a strong rejection here. Means that this is the seller's entry. I've explained that to you. The psychology behind all this upper week. And this one, you can see so many rejection. And again, so many rejection. So it means that this there's more possibility that this candle will reverse, because also look at the upper week also. There are some sellers at this area. You can see it reverse, and this is a previous support to become resistance. So it reverse. And look at this one also, the seller's entry. Look at this point here, this upper week, seller's entry. Again, a seller's entry. So a strong seller's area. And look at this one, upper rejection, the strong seller's entry, strong seller's entry. And look at it. You can see so many weeks, so many reasons why I placed a put option here. So I didn't place a put up. I didn't go with buyers. Most of the time, if you see a strong candle like this, you like to go with buyers, but because you don't observe what happened here. So because I already observed that within 1 minute, immediately I just zoom out like this. I check the candle. I look at the candle. Immediately I saw all this level, which I know that there are so many sellers entry at this level. And I notice that this candle closed exactly at that level. I didn't waste time. I just placed a put option with confidence. Same thing here for compound trade. Same thing here. You can see these levels. This is a resistance area, a support level. This is a support level. Previously, it was a resistance. Previously, it was a resistance area. Now it became a support. So it became a support because now you can see so many rejection here, rejection. When you are seeing this rejection, it tells you that the buyers want to push the price higher, you reject. Push the price higher, it rejects. Mean that at this area, there are some levels. If we check that of 5 seconds, there are some buyers and sellers activities here. At this level, you can see some sellers activities and again some buyers activities here. Some buyers activities here, trying to go more up. So it is a strong support level. It's a strong support level. And anytime you see market like this, if you see a strong rejection, and you see that the market close at that rejection area, you should place a call option. You should place a call option. If you see any again a rejection here, you can see that there's a very small rejection here. So you should count this small rejection as a rejection. So if anytime you see that like that, you should place a call option. Because previously this is a resistance area. Now it became a support. That's why I saw all this rejection and I saw the confirmation from all these buyer's entry. I see a buyer's entry. I see a buyer's entry here. You can see a buyer's entry here. You can see a buyer's entry, all this week. So I confirmed them. I confirmed all this area. That's why I placed a call option here. Then the third one was because when I placed a call option, I saw a very strong candle. And before this candle is forming, I was using this line to locate where I knew it will reverse. I place it here, the candle break it. I shift it to this level again, the candle still break it. Then again, I look all the way back. I didn't see any level, which I know that the level is here, the next one. Look at this week here. This week, the next level is here. And this one also. These two weeks, which I know that that is the next one. And you can see on the same point, the same level. It happened the same level. And this one again, the same level. And you can see on the same level, which means that this is the next seller's area. So at the next seller's area, I noticed that this candle is very strong. You can see a Margoso candle, no upper rejection. I noticed that on the left side, I didn't see any seller's area where this candle closed. So I just placed a call option because I know that this is the next level. So I placed a call option here. So the next level is here. So the market wanted to form a bearish candle. I was watching the candle because I already know that it will form a bullish candle. This is it. This is the trade I'm talking about. You can see the market is trying to form a bearish candle, but I know that it will form a bullish. I know that it will form a bullish. Like I said before, that anytime you see a strong candle like this, the sign of reversal. But I didn't see any means of where the market will reverse here. I checked, check. I didn't see any means why it should reverse. So I just used that, okay, at this kind of situation, no means that the market will reverse because already this is a reversal candlestick. A reversal candlestick is telling us that buyer will still go more up. So when I saw this, that the next level is here, and this candle close here without even upper rejection, the buying pressure. So I just placed a call option, and it gave me a winning trade, even a weak bias. And after a weak bias, I still place a call option. No, I didn't place a call option. I didn't place this way. I stopped the trade. Because here, the third one was because I saw this inverted hammer. Like I said, that this is a resistance area and this is support. So at the support area, I saw this candle inverted hammer. It will reverse the market. That's why I placed a call option. So you must have the reason why you should place your trade, and you should observe the weights. Okay, to find the level. Okay. Okay, now look at it. Once I look at the market like this, I know that this is a major downtrend and this is a minor uptrend. And again, I can see, okay, your big issue. Okay, that will be resolved. I think so. Now, this is a major downtrend and this is a minor uptrend. And you can see the movement, the patterns of the market. The market is moving like this, moving like this, moving like this. All these things you need to observe them. The market is moving like this, moving like this. And now the sellers is trying to form a bearish trend. Now, if you want to draw your levels here, go to the left side. Where is the next level? Next level is here. This is where I place the level because this is the lower candle, the turning point, the lower candle. I place the line at the lower candle, the lower body of the candle, not the highest. And again, the next level is here. This one. The 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 lower body of the candle, the lower body of the candle. And this one again the lower body of the candle, just to cover it up, just to cover all the bodies, all the two candles. And what happened here? This candle closed exactly at that level with a rejection. And this candle is a reversal candlestick. If you remember that, this candle is a reversal candlestick. It looked like hammer candlestick. So it means that, and it appeared at this level. So that means that it will form a bearish candle here. So when you see that, just place a put option, because this has given us confidence that the market will reverse because of this reversal candlestick. So the market reverse. And also you can see that this is a level, a strong level. The market reverse at a strong level. Even though we see some strong fire sentiment, the market still reverse. So on reversing, you are now compare that. Look at this candle. Okay, okay. Yeah, let me show you again. First thing, you look, zoom out to the extent that either you use this click here or you use your mouse, because here I'm using the mouse. So at the ball of your mouse, you just scroll it down. You scroll it, you roll it down to the extent you see this word written here. You cannot zoom out anymore to the current market interval until you see that. That means you already zoom out the whole chart. Now, when you zoom out the whole chart, look at the trend. This is a downtrend, and this is uptrend. So it tells you that any market that will go against the trend as impulse, that a corrective move will be for this downtrend, and any market that will go for this impulsive move will be for this uptrend. That's why I always check the trend first before I place my trade. Here, as I've seen the trend, observe the minor trend also, and again I saw a bearish momentum. I knew that there must be a bullish momentum here, or a bullish trend. Again, a bullish momentum. When I saw all this, I will now look, where are the possible levels. Check it very well where the market reverse multiple times. I think I've made such video. A level or an area where the market reverse multiple times, more than 2 times. Okay, let's say I draw it here. We still go to check on the left side to confirm if there is a strong level. I put my line here. I know that this market reverse here. Then I go again, I go back. I know that at this line which I drawn here, this line is touching this line again, it's touching this turning point. This either I place the line here, okay, I'll make it 3 lines. I know that it's touching this turning point. So either I place the line here, then I'll go back again. I'll place the line here. So it means that all this area, these 3 lines which I've drawn, is a reversal area. Let's check that on the left side. You can see the market reverse there, it reverse. Here also, you can see the market reverse. That means if the price was actually, here at this time, and we saw this, in the network is, let's say if the price was actually here and we saw all these levels here, it means that we still won the trade when the price is approaching this level. But you can see that we already drawn this level here. We went back again, and I see, check it very well. If the strong level, all this should be done within 1 minute. If you are trading on 1 minute, yes, it's a strong level because there are so many reversals at that area. You can see it reverse here, also it reverse. All this one also is a fake breakout. It reverse also. This one also it reverse. It reverse also. Even the support also it reverse. So it's a strong level. You can see so many times the market reverse so many times here. So many times. So it's a strong levels. And at these strong levels, I saw a reversal candlestick because this is a reversal area, and I saw a reversal candlestick, a hammer candlestick. So it reversed the market at least 1 minute. That's why I say you should always, okay, I think I didn't mention that. You should always respect after a strong reversal area, you should always expect a reversal at least 1 minute. That doesn't mean that you should not start placing put option here, put option here. You will lose the trade. When you see a strong level like that, like this, if you see a strong level, if you see a strong level like this, if you see a strong level like this a either a call option or a put option, then leave the market. Then if the sellers still come again to this level, then if the sellers again still come to this level, you should know that this is a strong level for the sellers. Now the buyers broke it, still it will not become a strong level. Having some network issue, I don't know why. Okay, let's continue. Yes, bad network. Don't know why. Okay, now look at this one, the market, this is where we are. At this reversal area, I saw this reversal candlestick, which I knew that the market will reverse at least 1 minute. Once I saw that, okay, no problem. Okay, can you still hear me now? Okay, what of now? Can you still hear me? Can you still hear me? Okay, I need response from you guys before I continue. Can you still hear me? Okay, okay. Uh, can you hear me now? Okay, now you can hear me now. Okay, no problem. I don't know what's wrong with the network. It's been giving me problems since yesterday. Okay, no problem. Let's continue. When you see a level like this, a strong level, and you saw that the market is approaching that level and it didn't cross that level, and the candle that appeared at that level is a reversal candlestick, so you should know that the market will reverse at least 1 minute, at least 1 minute. Not that the market will reverse strongly with a strong move. No, the market will reverse at least 1 minute. This is how you can trade on strong levels, and this is how you can draw levels. Also, you can also draw your levels by placing your line at the wick also, but I prefer placing your line at the body of the candle. I prefer that, placing your line at the body of the candle. You can also use the wick also as the, but anytime I place the line at the body of the candle, I already know what will be the next candle. Like now, most of the time I will not use three candles and three lines. I just place one line at this level because I know that this line is covering so many levels. Number one, number two, here also is covering some levels here. So I know that the market will reverse. Okay, how to know that it will reverse for 1 minute? Reason why we always say at least 1 minute. That means you should expect, you never know how the candle will close, except you have a strong knowledge about each candlestick. Like now, if I know that, look at this one, there's a level here, a strong level, and I saw this candle that formed. So at this time, I know that after this candle that formed, the next candle is supposed to be a hammer candlestick. And how will a hammer candlestick form? It's something like this or like this, which I know that, okay, the next level is here. So I'm not expecting this type of candle to form at this time here, this type of candle, because I know that once this type of candle form at this time, it will already cover the whole level. So that's how I always say that at least 2 minutes or 3 minutes, which I know that this hammer candlestick will be a continuation candlestick to continue the market at least to this level. So I've already calculated that it will be two candles to reach this level, or three candles to reach this level, or one candle like this to reach this level before it reverse. So that's why I always say that within 1 minute, so I'm expecting the candle to reverse 1 minute, at least 1 minute. Like this one now, the market reverse at least 1 minute. So you should not expect 2 minutes. Never you decide to say it must reverse 2 minutes. Reason that you never know how this candle will form. So assuming that this candle will form like a hammer candlestick and make a new low below this previous low. For me, if this candle will form as a hammer candlestick and make a new low like this below previous low, so the next candle will go down. So once I see this kind of candle here, I know that the market will still continue going at least 1 minute or 2 minutes before reaching this point here. So this is how you can determine either the candle will form at least 1 minute or 2 minutes. Okay. Okay. It is very reliable to use previous support as resistance. Number one. Let me show you. There's one thing I want to tell you guys. Whenever you see, let's say this is a support level. Let me draw an area. Okay. I have already drawn an area here. And this candle close at that area, and reverse. Maybe it reversed and went down. Maybe this candle reversed and went down on some with some reasons. And again, it come back again to this level. Come back again to this level. So you should not expect that this level will still be working multiple times. Like I said that any level that is tested multiple times is tend to become weaker. The more the level is tested, the more it becomes weaker. So it we break this level with a strong point. Look at what happened. Look at this candle that break it. This bullish candle. It break it still, the buyers still continue their movement. So once you see that the level is being tested once, maybe from support to resistance and it's been tested, don't ever try the second attempt. The first attempt is the most reliable one to use. Don't ever try to use the second attempt. The second attempt will make you lose your trade. So the first attempt should be the reliable one. Like this one, this is the support level. Now it became resistance. If the market we should go down and then come back up again. So you should not try to say this is a strong level, so if you reverse the market, no. First attempt is very important than the second attempt. To be on the safer side, the first attempt is much important. I will show you some of the things like this one. Look at this one. A previous resistance now became support. If the market, you can see this market didn't reach that level, but assuming that it went to all the way to this level, it will reverse, it will continue going down. It will not respect this level. It will not respect this level. It will continue going down. Look at this. This a level. This a level. Let me draw an area. This level. This an area. And what happened? Previous resistance that became support. Now, what happened here? The market came to that same level, and it didn't respect this level. That means it is better to use the first attempt than to use the previous attempt, than to use two attempts. Use the first one than to use the second one. So the second one, you can also use it, but it is, let me say, 50% sure that the market will reverse. 50% sure that the market will reverse. So the first attempt, you should try the first attempt. The second attempt, don't try it. The second attempt, don't try it. It is like someone like me that when I see the second attempt, that I will know what to do about it, because I will first analyze the market properly. I will know that, okay, I saw a strong bearish trend, so it will not respect this level. Strong bearish trend. It will not respect this level. And second one is this. Second one is this. A ranging market. So it is only a ranging market that you can be trusting levels like say 2 to 3 times. Anything more than 2 to 3 times, the market will take that level. Let's say this ranging market, right here. This is the support, resistance, and this is support. Now you see this kind of market here. So you know that the market is ranging from this swing high. From this swing high. The market didn't go above this swing high. So the more the market is tested on these swing highs, anytime the market will come to this level, it becomes very small, small candles. Because these are the kind of momentum I hate seeing on the chart. I hate seeing small candles. These small candles that form to a level, they are called power move. In fact, they will not respect any previous level. That's why I hate them. They will not respect any previous level, even though the level is very strong. Their own is just to continue forming small candles. But they say there I saw about 32 small bullish candles in OTC market. 32 small bullish candles. So once you see that small candle is forming like this, and reach this level, they will try to test this level. They will try to test this level. Once they test this level, they will show a strong sign that maybe they will reverse, maybe a very weak bullish candle. Before you know, the next candle that followed was a strong green candle. Still, they continue their small bullish movement. So whenever you see a level tested multiple times, don't trust it. The first attempt is very okay. Always try the first attempt. Don't try. Look at now. This is a level right here. Show you very well. This is a level. This is a level right here. which the market reversed from that level. But what happened? The buyers come into that level, even did not even take a look of reversing at this level, still they continue the market. So it means that after this level being tested once, the next movement will be that after buyers came in very strongly, they will not respect this level. And you may not know that if the market will reverse or not. So it is better you try the first attempt than to go for the second attempt. Always use the first attempt. And again, don't go against the trend. Don't go against the bullish or bearish momentum like this. Don't say because there's a strong level here and this candle close at that level, still you want to place a put option. That is not how to. So you must obey their rules until you see a confirmation that the market will reverse. What are those confirmation? A strong candle at the end of the momentum, or a weak candle at the end of the momentum. This is when you should try, or you will not decide to place your trade. So there's a day I saw small candles. They were forming. They are forming to a particular level, and this is what I call a power move. So they are called power move in the market: bullish power move and bearish power move. So this is the meaning of power move market. So their own is to attain their goals, just to push the market higher. Maybe they try to test the market with a strong body, but they fail. Now they try. Okay. Which question was that? Entry points, levels, and area. Okay, just like recap of previous section. Okay, let me just use that. Let me just use this video which I. So now look at this video which I make today. Are you all seeing it? So I want to use that to explain the buyers and sellers entry point and levels and area. So are you all seeing this screen? You are not seeing it? I
We
mean
can't
the
see the video.
screen. Okay, you are seeing it.
We are not seeing the video.
You are not seeing the video.
No.
You didn't see what is written below, that this video is not an investment advice.
No, there's no video showing. It's just your desktop that's showing.
Okay. So what of now? Are you still seeing it?
No, sir. Use your Zoom share. If you use your Zoom share, we can see it.
I use the Zoom share. what of now? Are you still seeing it?
Yes, we can see it now. We can see your chart now.
Okay. Or what of the video?
Yes, this video is not an investment advice.
Yes. Have you seen it?
Yes, we are seeing it.
Okay, no problem. Okay. So I want to use this video to explain some things which I this is the video I took today. Okay. Yeah, I placed some trades here, 4 trades, and I choose this pair, Euro JPY. So first thing I look is first thing I look was the trend, the major trend, and again I saw the trend, minor trend, the major trend and the minor trend. So that is the first thing I do when placing my trade here. Okay. Now I look at the chart again. I look at the chart again, and I saw that still this is an uptrend. I look at the chart again, this is an uptrend. Then again, I saw this bearish movement. So that means after this uptrend, I'm seeing some bearish movement. It means that sellers are coming in. Once you see this kind of movement after a bearish down, a bullish movement, a bullish uptrend, and I saw this bullish momentum, it means that sellers are trying to come in. So I should pay attention to them. That means sellers are also trying to make their own movement. Sellers are also trying to make their own movement. So that is the first thing I first observe here. Okay. And again, then I now zoom out. I zoom in the chart. I zoom out again. I look at the chart again. Then I zoom in clearly. Now I now saw this candle. I saw this candle, this bullish candle, a weak candle. This candle formed because of buyer's area at this buyer's entry point. Look at this buyer's entry point. Look at this rejection. This candle closed at that area, at that buyer's entry point. Look at it here on the left side and see there's some rejection in that area. You can see this rejection. Also, you can see a rejection, that is resistance. This rejection also is a resistance. So also this one again, rejection, a resistance. And again, I can see rejection here and a buyer's entry from this level. Again, rejection here and a buyer's entry from this level. Then I now saw this candle now form a rejection again. So that's why you're seeing a buyer's entry. But with all the confirmation I saw here, this buyer's entry didn't make me to have confidence on them to go with buyers. It formed a weak buyers. A weak buyer's entry. It means that all this line here, all this weak, all these points here, is telling me that the buyers that are there are not strong. The buyers that are here at this level are not strong. So, and this rejection even now confirm me today that there are some buyers activities. If you check that on 5-second chart, you see that there are some buyers activities. So that's why this green candle formed. But this green candle shows me that the buyers at this area is not strong. So what I do, I just place a put option. So what I do, I place a put option. Then when I place a put option, I look at the chart again. This candle formed a bearish candle. That means my prediction is right. Then I look at the chart again. I look at the nearest level and I look at the strong bias area and strong bias entry. The strong bias entry, you can see a very strong bullish candle form at this level. So this is strong bias area. Again, this one also a very strong bullish candle form at this level. So this one also is a bias area. But do you ever consider the week? I also consider the week, not only the bias area. Consider the week bias area. This one also bias entry. This one also a rejection, which was a resistance. So I saw all this one upper week also a rejection, which was a resistance. This one also rejection, which was a resistance. And this one also there is a level here. You can see a resistance, and now all these upper rejections show that the resistance become a support level. But now, not only all these things that make me to confirm what will be the next candle. I also saw this 1-2 move. 1-2 move. I look at it very well. I know that market will reverse. Once I saw it like this and I confirm it from all this area, then I place a call option with confidence because I can see a strong bias entry from this level, a strong bias entry from this level. So I just place a call option with confidence. Let's see if I won the trade or not. You can see now watch the candle as it's doing. So I zoom in closely just to observe the candles. What I do, I saw a rejection, place a call option. And if you look at the candle is trying to go up. See, sellers are rejecting it, trying to go up. That means at this time, the buyers and sellers are still fighting. So now, what you do, what you are expecting that if this candle will now close as a bullish candle, the next candle will go more up. And again, if this candle will close, maybe you have a loss in trade, and this candle will close as a bearish candle, next candle will go down. Because of what I saw here, look at it. That's why I say observing the candles is very much important. Just zoom in the chart. You can see the buyers. You can see the buyers try to go more up. Still sellers push the candle down, market down. See, form a bearish candle. Again, buyers try again. There are some fluctuation between buyers and sellers here. So, and now I'm expecting a bullish candle to go with buyers. You see, now it closed as a bullish candle. So I place a call option with confidence. So it closed as a bullish candle. So you can notice that I didn't check the levels again. I didn't go back to check the levels, but because of what I observed here, when you observe the candles, it will give you more confidence to place your trade. So because of what I observed here, I was able to place my trade with confidence. Then I place a call option. Now placing the call option, I still observe one thing. Now look at this candle. Look at this candle. You may think you have lost this trade, but you have not lost because there are some sellers at this area and you can see a downtrend. But this downtrend is not strong. The reason why it's not strong because of this bullish candle in the middle of the trend. So buyers are already dominate the level. So this is a strong downtrend. Assuming that there's no bullish candles here, there's no bullish candle here. After this candle, the next candle will be a bearish. But because already I've saw a bullish candle, and because of this 1-2 move, so I just place a call option here. And now look at this candle. Observe the candle. The candle, the buyers try to go up, yeah. Then on reaching this level, the sellers reject the market. It means that the sellers are here. The sellers are here. And now you can see from this level, we can see a strong seller's entry. But this candle will close as a bullish because of my prediction. Now let's see. Now let's watch. You can see note the where this candle will close. Note the upper wick where this candle will close. That is where we give you next. This is where we give you next assurance on confidence to place your trade. Note this level here. Note it. If this candle will close there, then you know what will be the next candle. So let's see. 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 Now it closed exactly at that level. Watch again. You can see it closed exactly at that level, which I saw the seller's entry points right here. It closed exactly at that level. And when it closed exactly at that level, I check on the left side because I can see a seller's entry there. You can see this week here. This is also a seller's entry. So I confirm my trade taking a put option here with these two things, and also the downtrend, and also the 1-2 move. So when I confirm this, when I find the reason of placing a put option, and this candle also is a reversal candlestick, a hammer candlestick. So it reversed the market. So when I saw all these reasons, I just placed a put option. These are the steps that you need to take before placing your trade. Observe the candles, very much important. Don't trust on levels. So let's see. You can see I placed a put option here. Now a strong candle form. I see it gave me a winning trade. Okay. Now let me show you. It says something. Okay, now look at where this candle close. Look at this level, this point, this candle close here. So what do you think will be the next candle after this candle? It's very simple because you know that the buyers are here. Buyers are here. Buyers are also here. But this candle close here. This bearish candle close here. Also the buyers are here. So what do you think will be the next candle? The next candle will be a bearish candle. Next candle will be a bearish candle. Because already the candle closed here, so it's still far from this buyer's entry. That's why I say observing. You can see that I didn't go back again to go and draw levels. So this is how I always trade on momentum, like this. I didn't go back again to go and check the levels. I will just look at the level of the week. I'll just observe the week, the body of the candle or the candle itself, then before I place my trade. So not for me to be going back and be checking levels. So I will just place a put option here with confidence because I've already observed the market. And again, let me share you another video which I put. And look at this one. I think I have uploaded this video before. Look at this one. Look at this uptrend. I zoom out the chart. This is uptrend, and again this is a downtrend. So I already know the trend now. So the next step I took was I zoom out the market. I zoom out the chart. Then after I zoom out the chart, I look closely at these candles, how they fall. You know, I didn't check the levels again because I have already gotten my answer here. I didn't go back again to check levels because I've already gotten my answer here. Something like this. So my answer is already seen here. So I didn't go back again to check levels. So what happened next after I saw this? After I saw this candle. Now, when I saw this strong rejection, I knew that this candle will form inverted hammer. I just place a call option. Okay, just place a call option. And why I place a call option was because of this inverted hammer. If you remember our first session, which I say inverted hammer is also a sign of reversal candle. And how many inverted hammer do we see here? Or you call it a shooting star. See, they are the same. How many reversal candlesticks do you see here? We see 1, 2. And again, at this level, this 1, 2 move, I'm seeing inverted hammer. It means that buyers still want to go more up. And look at it. Where are the seller's entry points here? The seller's entry point is here. This one, this one, this one, this one, this one, this one, this one. But what happened here? This candle, let's see how this candle close. You will notice that it's trying to dodge the seller's entry point. Even with a very small move like this, the market will still respect them. Let's see. I place a call option here because of what I have seen. You can see it closed below. So when I notice that it closed below all these points here, this minor sellers area, I knew that the next candle will go on because I was watching this candle. That's why you need to observe, you need to watch the candle very well before you place your trade. So I see it closed very small move to show you that they are trying to dodge this sellers area so that buyers will continue the market. So I just place a call option. And what happened? The next trade, though I won the trade, so I choose the next pair. Then one thing I observed in this pair was that, which I didn't trade on this pair, was that because of this so many weeks. So if I try to use levels, I won't see a proper level to place my line. So I just leave the trade. I just leave the chart. Okay, I change the pair. So that's why I always say you should not trade on so many weeks. So I change the pair. And here, one thing I observe, look at this. This is a good market. I look here. You can see that everything I was doing was within. I was using my mouse like something else. I was trying to view it clearly first, then zoom it again, just for me to know what is happening here and what is happening on the left side. And I confirmed that from this level, I can see a strong level. A strong level. Yeah, I didn't draw it. Draw the line very. I can see this level, this one also, and this one also. Then at this level, I'm seeing a sign of weakness of buyers in the market. How do you know the sign of weakness? I'll show you. Look at this. And look at this sign of weakness of buyers in the market. This is the level. and I'm seeing a rejection, seller's entry, a rejection, seller's entry, get a rejection, and a weak bullish candle, see seller's entry. So what happened? I now saw that this candle supposed not to be a bullish again because of what I'm seeing here. See what already I've seen here. So this candle supposed not to close as a bullish. Instead, a bearish. And let's see what happens next. You can see this wick here. It's a sign that there are some strong sellers. This is selling pressure. It means that the seller tried to push the market lower, but rejected from buyers. So the buyers are here. The buyers area is here. Okay, you should take note of that. So let's see how this bearish candle will form. Okay, I see it form very strong, a very strong bearish candle. So I just place a put option with confidence. Reason why I place a put option here because I know that the buyer's area is here, and I saw that because of this strong selling pressure, it means that there are some sellers at this area that try to push the market lower to this extent, but rejected from buyers. So it means that there are some sellers at this area. Then I saw a strong rejection from sellers area, and a strong candle from sellers area. So already the buyer's entry point is here. So that means that I will place a put option with confidence because I already know that the next level is here, the next buyer's entry, which I know that if the market should come to this level, buyers will enter. So the next level is here, or the next level is here, possible of reversal, or the next level is here. So these three area is the next level which I expected the market, but this candle close exactly here. So I just place a put option, confidence. So let's see what happens next. Let's see. Okay, although it gave me a winning trade, then still I came to this chart because I was changing the pair. I was changing the pair. And this one thing I observed is the same 1-2 move. Go back. You can see a very strong seller's entry. Okay. This one I zoom out. Let me show you where I zoom out. Okay. You can see this is where I zoom out. I was checking this candle, but the way I was seeing these candles, I'm seeing a frustration between buyers and sellers. So I now check the trend. If the trend is a downtrend, then I was doing all this within 1 minute. You can see the time 0.59. So we still have some minutes to reach 1 minute, some seconds. So I was doing it like this. I view it downtrend. Then look on the left side. What is the next possible of reversal? It's here. Next possible of reversal is here. So I didn't draw it very well. Next possible of reversal is here. And I look at this candle. It's frustrating. So what is happening? What is going to happen to this candle? So let's see. So everything I do, I just see the market very well. I can see a strong bias. Again, a strong seller, but the seller are not strong here. Then what I do, I look at this 1-2 move. On this left, 1-2 move. Again, want to draw it anywhere. 1-2 move, but you should not force to draw it. You should not force yourself to draw it. 1-2 move. I look at this 1-2 move. Yes, I put that in mind. That okay, I have seen the 1-2 move. Okay, so let's continue and see how the candle will close. Still again, I saw a strong seller. I still observed the 1-2 move. I knew that the market will definitely reverse. And it closed at the buyer's area here. So once I see that, I just place a call option with confidence. Again, I still observe the 1-2 move. Then I notice that there are some buyer's entry here. You can see buyer's area. buyer's entry point, buyer's entry point. Here also buyer's entry point. Here also there's a rejection. So it is a resistance area. Here also buyer's entry point. Here also buyer's entry point. And this candle close exactly at those points with a rejection. So next option, if you want to go with sellers here, this candle should supposed not to close with a rejection, either a Marubozu. So if this candle will close as a Marubozu, then you go with sellers. But this candle now close with a rejection. That's why I place a call option here. Let's see if my prediction is right. I see with the rejection, I place a call option. So let's see. Now I look at the chart. I know that I won that trade. And look at this one. This last trade confused me a lot because yeah, that's why I say anytime you see a long wick like this, you should not trade. I saw a long wick here. I can see so many long wicks here, even the lower long wicks. So this is not the type of market I'm expecting to see here. But I now saw this strong rejection of buyers, and this can be close exactly here. Let me show you. Try to. That's why I say anytime you see a long wick in the market, try to avoid it. I see, and I saw this bullish candle forming. I saw this bullish candle forming. With a buying pressure, I placed a call option. So I placed a call option with confidence, but still, I'm so lucky. I would have lost this trade because these long wicks here, I'll show you, because these long wicks already confused me because I didn't observe these long wicks. I didn't observe it. Once, if I notice that if I saw this long wicks, I wouldn't place a call option here. I will place a put option straight, even though the market will close above my entry. Still, my position is right, but I didn't observe it. But it is when the candle start forming along with that, I now notice that, oh, there's a strong seller's entry here. This long wicks, there's a strong seller's entry. So I was contemplating that if this market will give me a loss in trade, but definitely because of my luck, I won the trade. Let's see what happens next. I see the bullish candle start forming. We start forming. But on reaching this same level, same high, I saw a quick rejection. So once I saw this, I now noticed that, oh, it's because of this long wick. That's why I didn't notice that. I see so many wicks here. So I didn't notice that. Even this one that is forming, once you reach this area, it will reject. So this is how you can predict the next candle with candlestick psychology. So you should observe the wicks and don't trade on long wicks like this. Long wicks. Even all these long wicks is not good. Try to trade on moments of like this. This one, before you place your trade. So this is how you can observe the market, and this is how you can predict the next candle with confidence. Once you have assurance of what you are trading on, then you can place your trade with confidence. Okay? I think I have taken months. Okay, how to identify weak buyers at support level. Next candle will go down right fast. Okay, now how to do that? So I think this will be only last question. So how do you know that at the support level? Let's check. Okay, you said at the support level. Okay, weak buyers at the support level. Then the market will go down. If the market will only go down if you see a strong bearish movement, like this one now. Look at this. This doji candlestick you are seeing here is a bullish candle. It's just that buyers are not interested. buyers are not interested. They are fearing or they are afraid to enter the market because they saw this strong sellers movement. So they thought that if they should enter the market here, this strong sellers movement will not allow them to continue the market. So that's why they close as a doji. So the buyers are not interested. This is a weak buyers. That's why the next candle form a bearish. But yeah, the bearish candle that form here is also a weak candle, a weak body. So if you expect something like this, let's say this is a weak, a bearish candle, you should expect the body should be to be like this, but not this type. And the body closed like this. So buyers took the advantage that okay, we have that we have entered the market here very strongly. On reaching this point, the sellers rejected us. So now we are seeing a weak body bearish candle. So it means that buyers will still continue the market here. So they came in very strongly with a strong body, forming a bullish engulfing. So the next candle will start going. That's why buyers use that advantage to go more up. Here they were afraid to form a bullish candle because they saw this bearish downtrend. So they don't want to go up. They don't want to form a bullish candle. They saw this bearish downtrend. So this is the reason why we can do weak buyers entry or weak bullish candle always reverse the market down because of strong sellers movement. Same thing is happening to sellers weak sellers candle. Now look at this one. Look at this one. A weak buyers, still the buyers enter the market after a strong sellers. So this tells you that the major trend is uptrend here, and the major trend is uptrend here, and this candle form a reversal candlestick form, and again the reversal candlestick also form, and this candle is a pin bar. It means that the sellers try to push the market lower, but rejected the buyers reject the market. Same thing, buyers want to push the price higher, but the sellers rejected the market. And this candle now closed as a bullish candle. So after this strong sellers movement, is still a bullish candle still appear here, the small body. This now tells you that the buyers are now interested in the market to enter the market at least 1 minute. Because after this strong candle, we are seeing a bullish candle instead of bearish to continue going lower. But here, the buyers use their opportunity, their strength to form a bullish candle. Bullish candle. That's why the next candle go more up. So this is the reason why this candle formed. After this candle, the next candle was a green. So if you want to be trading like this, you have to be careful. Check the trend and check what happened to those momentum. Whatever that happened to those momentum will determine how the market will move. How the market will move. Look at this one. It made a new high. Reverse the market. Buyers enter. So weak buyers at the support level, most of the time it reverses the market when you see a strong reason why you should reverse the market. Look at this one, a strong candle. After a strong candle, a strong candle. You can see after a very small candle, a strong candle appears. So buyers enter. So buyers now show the full confidence that this is a buyer's head. You can see from this level, the buyers enter the market very strongly. So it means that the buyers are very strong here. But on reaching here, they become weak. On reaching here, they become weak. So now they become weak, the sellers will not be able to, this seller movement will not be able to form a bearish candle. But still, they are still seeing a buyer's entry because the seller is supposed to continue the market because of this candle. They're supposed to continue the market, but still, we are still seeing a buyer's entry. That's why buyers show the confidence. And this candle is a reversal candlestick. Buyers show the confidence of entering market. These are the psychology behind buyers, weak buyers, and weak sellers. If you are expecting to see a bearish candle at the level or bullish candle at the level, and you see the opposite candle, that means you should go with the candle. If your analysis is good, you should go with the candle. Like this one, the weak sellers, buyers center. Like this one, you can see there's no reason why I should go with buyers here, because here I didn't see any strong. This is the level which I'm expecting the bullish candle to form. Strong buyers entry. But look at where it formed. This one. Look at where this one is formed. You can see a strong seller entry. And again, the red green pattern. And this one again, look at where it formed. So there's no sign that this candle should go more up on this level, because already there's a downtrend. And this candle is a continuation of this downtrend. Same thing with this one, continuation of this downtrend. So there's no strong sign that this candle will reverse, because this is the buyer's entry. This is the buyer's area, strong buyer's area here. But still, there's no sign that the market will reverse. Like this one, it reversed because we are seeing two spinning top, a sign of reversal. This one also it reversed because we are seeing two spinning top, a sign of reversal. Same thing here, two spinning top, it reversed. So if you see two reversal candlestick at the level, it's a sign that the market wants to strongly reverse to the opposite direction. Again, shown again. Two spinning top, the market reverse. Two spinning top, the market reverse. So it works so many times like that. Two reversal candlestick, the market reverse, because this also a reversal candlestick, hammer candlestick at the level. So and again a spinning top candle, a weak candle, market reverse. So it works so many times whenever you see this kind of market, or whenever you see this kind of market situation. Okay. So I think this will be the last section, and do not forget that this will not be our whole last session. So anytime I have chance, I will still be calling on you guys that okay, there must be a class today that we get ready. So I would like to be showing you some things about the market. So not that this class this 3 or 4 days class is not enough for me to say everything about the market. There are still some things that you need to know, but it's no more time for us. Maybe later I will announce that for you guys. So it might be maybe next time, maybe twice in a month or twice in a week. Okay. And if you have any question to ask, ask now. If you have any question?
Hello.
Okay.
I wanted to ask a rather personal question.
Yeah, no problem.
I wanted to know your experience and how your journey to become this good in the market. I believe it involved a lot of work.
Okay.
I don't know what was your approach to get to understand the market this way.
Let me just start by saying that when I start trading, I passed through so many things. That was during 2014. So in 2015, I joined IQ option in 2015. 2014, I started trading forex. So all those years, I didn't know anything about the market. What I just know was to be placing trade, buying and selling, call and put. Even by then, IQ option has never upgraded to this system. Before, their chart was not friendly at all. So I disciplined myself so many times then. In fact, if I should tell you guys that if you want to be a professional trader, you must work hard. but you will not understand what I mean by that work hard. Work hard. I remember some years ago that the time I decided to study candlestick on the chat because I didn't have anybody. I was only myself. I don't have any friends. I was myself. I was just staying alone. So I don't have friends. I don't have boyfriend. So I'm just myself. The time I start studying this candlestick, I have so many challenges. I have passed through so many things. Most of the time, I will not have money to do what I want to do. Most of the time, I will not have money to do maybe to learn or to find someone to teach me. But I decided that let me study this chapter myself. So that's when I started studying the chart. I started studying the chart, observing the candlestick, observing the movement, the behavior of each candlestick. And and if I should tell you that you may not believe that it took me 72 hours, 72 hours to study each candlestick. 72 hours. What I mean by 72 hours, what I'm saying that I did not eat anything. I did not sleep. There was electricity throughout that day, but I was just with my laptop trying to study this candlestick. So for good 72 hours. And how many days is that? 3 days. No sleeping, no eating. It's just that I brushed my mouth. I just some minor thing. But I didn't sleep. I didn't eat anything. Just for me to study this candlestick, how are they formed and how they behave in the market. Took me 72 hours. But when I finished this, I call it marathon. When I finished studying this candlestick, and I see that, and I noticed that from there, my trading style, my trading, uh, my trading style start to improve. I start improving in trading. That I can even predict candlestick without fearing. I can even predict candlestick without even afraid of anything else or maybe to lose. And most of the time, if I have a losing trade, I don't mind the trade. This is one thing I want to tell you guys. Whenever you are trading and you have a losing trade, don't mind the lost trade. Focus on what will be the next candle. If you mind the lost trade, you will be thinking that, oh, this trade, I love this trade. I lost this trade. So I don't know what will be the next candle. So in minding the lost trade, you may not know what will be the next candle. And you may lose your trade. So don't mind the losing trade you have. Mind what will be the next trade after the losing trade. It's just the same thing that when you have a winning trade, you just know what will be the next trade. So I took all those challenges that I must study this candlestick. I passed through so many things. In fact, up to now, I didn't have any ebook. I don't have any ebook. I don't have any PDF reading or anything else or anything materials reading or anything. What I learned is from the chart. On the chart. When I start learning, I always use this line chart. And I used 1 minute. Yeah, I'll show you guys how I use 1 minute. Be watching this area. Watch this area until you see 1 minute. I see 1 minute line chart. So I start drawing support and resistance. Start drawing support and resistance. Support, resistance, 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 which I know that after the market will retest that level, it will become a support. So this is where I start. Then I now move to candlestick. That there's something that is more advanced in the market, which is candlestick. You can see, and now look at it. Oh, this line chart I've drawn is correct. So I saw that this resistance, again resistance, support, support, support. Now I now take note that anytime this market, this candlestick form at this support or resistance, how did they behave? So I didn't always check the levels. I go straight to the candle. Let me see how they behave. Are they trying to touch the level or are they trying to test? You can see some fluctuation. It means that there are some buyers at this area. Yeah. So I now study that this candle is always going up and go down. Again, it go up and go down again. What causes it? Then I now go for 5-second chart. Check it. I notice that there are some buyers entry. You can see some buyers entry. It means that it's stopping them not to go down. But unfortunately, the sellers push the candle, they push the market lower. So that's when I start observing the candlestick, the chart, for good 72 hours without eating, without sleeping, without even, it was only me. I locked myself in just to study this candlestick. But I noticed that when I finished this studying the candlestick, I came out with some good results, which I enjoy so much. That is when I start being profitable in the market. Before, I don't know how to trade. I always depend on indicators. Most of the time, I may use up to seven indicators. But still, I keep on observing that every time I use indicator, I always lost my trade. Is there anything else someone can do without using indicator? So I now decided that there must be something. I studied the chart, studied the candlestick. So the indicator doesn't help me. Even indicator make me to know so many things. Then, so that is when I start studying. That's when I start making profit in binary option, just to study the chart, the candlestick, and everything else. Okay. So if you want to become a successful trader, you need patience. That time I didn't rush myself. I was patient enough. You can see the years I'm talking about. Since 2015, I've been studying. I've been in IC option. 2015. So I discipline myself and I have patience in anything I do. So I don't rush myself doing anything else. And I don't have anything doing now. This is what I do. This is where I feed myself. Even when I was in school, this is where I feed myself. I use this as to pay my school fee. Nobody else. Parents did not even know anything about it. They don't help me. I'm the one that help myself. So when you have this kind of knowledge in market, you should try to use it. And don't misuse any opportunity. Wow, use it in a very good way. So when I noticed that I have the knowledge of candlestick psychology, I noticed that there must be something that I need to achieve. So it is one day that when I end of the day I start practicing what I learned, what I studied on the candlestick, I saw Benisa video on YouTube. To my surprise, it was the same thing, the same way he trade. That was the same way I trade myself. The same way he trade, the same way he analyzed the candles. I was thinking that, does it mean that he too always into also uh, study the chart the same way I do? So I was surprised that he does the same way. I was even amazed when I saw it. So you can also watch his video. His video is also much interesting. So this is what will make you to become a successful trader with discipline yourself. And I remember one time he said that he lost so many times in the market, but when he has this knowledge, then he start making profit. So this is how you can become profitable in the market. We can use this psychology. There are so many indicators, so many things. And there's a question that I want to answer yesterday. Some of you asked me that how many trades I took a day. That maybe it's 3 or maybe it's 4. I took 12 trades a day. And I divide these 12 trades in 3 sections. The first section will be 4 trades in the morning. The second section will be 4 trades in the afternoon. And the third section will be 4 trades in the evening, not night, because I don't always trade in night, not night. So I now count all these trades as 12 trades a day. So maybe this 4 trade I took in the morning, if I have a loss in trade, let's say one loss, if I lost 1 trade, I will recover it. Then that means I've taken 5 trades. If I have 2 trades, I'll recover it. That means a loss in trade, I will recover the 2 losses. I've taken 6 trades. Same thing here. If I have maybe 3 loss in trade or 2 loss in trade, that means let's say 6. I've taken 6 trades. Then here, if I have let's say 3 loss in trade, 3 loss in trade, then I will not do anything. I will not do anything if I have a loss in trade here. Let's say 3 loss in trade or 1 loss in trade, I will not recover it. I will leave it like that. Just my daily target is 12 trades a day. That's why I think that anytime I make a video, it will be 4. So anytime I make a video, I've already taken 4 trades by myself. Then the video I will make will be 4 trades. Then the next time I will trade maybe in the evening, it will also be 4 trades. So these are my plan, my daily targets on each day. And most of the time, I don't trade 24/7. I usually took some days which I know that I'm less busy and not too much occupied. So on Friday and on Saturday and Sunday, which is OTC market, I don't take 12 trades. I can't do that. I only take 8 trades on Saturday and Sunday. 4 on Saturday in the morning and 4 on Saturday in the evening. Again, 4 on Saturday on Sunday in the morning and 4 on Sunday in the evening. So that means 8 trades on Saturday, 8 trades on Sunday. So all the trades I took, if I should take for 24/7, let's say 12 times 4 trades, 6, 5 days, that is 60 trades. Then plus all these 8 trades, which I take on Saturday and the same thing on Sunday, which is 76 trades. So I took in 1 week, I took 76 trades in 1 week. And I don't do mitigate or whatever, what do you call it? I don't mitigate. So I just use my normal balance. I always start with, most of the time, I always start with $15. Most of the time, I start with $15, or I start with $10, or I start with any lower balance I have on my account. So once I make a profit for that day, or maybe for the weekend, I will drop the money, then I will let $15 my account. Because of the class for this week, so I didn't trade too much on my life account. So I just took some few trades. I didn't trade too much. Okay. This is how my daily target is, and this is how I set my daily target. So 4 trade is not the trade I took, it's 12 trade in each day, except Saturday and Sunday. Okay, okay, guys. Think any more question? So you might go online and search for any money management. So if I should tell you my money management, it may not benefit you, it may not favor you. Okay, no problem. If you have any question to ask, you can do that in the WhatsApp group. Okay. And we should not take this as the last class. So I want you guys to learn something and to start making profit in the market. Okay. So maybe anytime I have some classes, I'll just inform you guys. Okay, guys, thank you once again for attending this class. And this is the last session. Okay, the last session. And about the video, it's just that the video which I want to send to you guys, it's just that the time my system is having problem, all the information was in that hard disk. But now for me to recover the hard disk, I can't now. So that means I will have to make another video, and I will do that tomorrow. So in the WhatsApp group, I will send the video to you. The video is just a simple strategy that can help you recover your losses if you follow the rules. You might have seen the video before, or you might have seen part of the video which I upload on YouTube, but you don't understand. So the video can also help you. And I have tested I've tested the strategy, and I see that anytime I use it, I always be in profit. Anytime I use it, I always be in profit. So I just want to share it with you guys if you can try that as well. So tomorrow I will upload it with no one. Okay, no problem. Okay, guys, thank you once again for attending the class. See you guys. Good night.